state treasurers like myself, generally we're in the check delivering business. We spend almost $750 million every 30 days just for health care, pension, and pharmaceutical benefits for retired and active state employees. And obviously part of that is to make sure that the portfolio has a proper asset allocation, and that's where our focus is right now. And you know, your viewers don't wake up thinking about unfunded liabilities. And
do you?
Absolutely.
You do. And you're not sleeping very soundly anyway, so it's easy to wake up.
Well, if you work hard enough, you sleep pretty soundly. So, they don't wake up thinking about assumed rights to return and life expectancies. They wake up thinking about public education, public roads, public safety. And as Bill Gates said over 7 years ago, that money is going to be taken away from things that people care about in order to fund the unfunded liabilities for health care and pension.
Right, and as far as pension goes, North Carolina's pretty good. Health care is a different story, right?
Well, we have one of the 5 best funded pension plans in the United States. We have headwinds like every other state with Wall Street fees. The former Treasurer Harlan Bowles, when he wore this very lapel pin, the Wall Street fees were $50 million a year. And when I was sworn in, they were nearly $700 million per year, Wall Street fees. And then life expectancies. In the mid-'70s, we had 248 90-year-olds who were getting a check, 90-year-old and above. And last month, we had 7,100 90-year-olds getting a check.
Wow.
So fees going up, life expectancies, which is a blessed event, going up. Of course, interest rates going down, and about 40% of our portfolios in fixed income.
You can't battle old age. You want people to get older and have those have longer life expectancies. What do you do to battle the Wall Street fees?
Well, what we're doing is we've called every money manager in the first 100 days of my tenure, ask them who are you, where are you, how good are you, and how much are we paying you. It's amazing when you ask 4 basic North Carolina questions like that, what your answers can be. And ironically, by the time we called the first 10, the second 10 knew why I was calling. So last year we cut fees by $73 million. That's a 4-year run rate of over $300 million. But we're not through. We actually found, because we have the $100 billion pension plan on the second floor and a $12 billion defined contribution plan on the first floor, we were actually found a money manager that was not giving us the benefit of the totality of that relationship, and cut fees by over $1 million when we kind of put all that stuff together.
If you go ahead.
Well, was that just lower rates because you called and asked, or did you get rid of some funds who weren't going to give you a better rate?
It was asking, number one, and obviously we got rid of some funds. When I was sworn in, I realized that there was $11 billion of blank checks on the pension plan. This is committed capital that has not been drawn yet. In addition to that, the previous treasurer had invested 2 years worth of investing the year before I got there. So it was just a matter of reducing complexity, building value, but now our focus going forward is how do we sustain this plan for the people who are using their back, their hands, their feet, their minds, and their heart to educate our kids and protect us, our streets, and pave our roads, and all the other core functions of public service.
You have been a nightmare, I think, probably for some hedge fund manager. Do you not necessarily? Do you think the benefit of hedge funds is that oversold to people like you?
Well, I think it's important that any fiduciary who has a loyalty and duty of care to the participants, that they sign their contracts and not Wall Street contracts. And what I found in many cases is that once this money was allocated to these types of investments, we don't own those investments anymore. They own us because of the way they're structured. So,
have you seen examples to this day of pay for play, things like that? Do people try to suck up to you to get to, I don't know, have you had offers where you had to look at them and say, are you out of your mind? You know who you're talking to? Or, I mean, it still works that way, doesn't it, to some extent, the cronyism and pay for play. Sure. I mean, it's human nature, almost.
Well, ethics is what you do when no one's watching. And even though I might talk with an accent, I don't think with one. And so
you got some good lines. I'm going to start using.
So you know, this is a big issue. I know Andrew wrote the book Too Big to Fail. These unfunded health care and pension liabilities are the next sequel to your book.
Right. What do you make of sort of the social impact investing trend in America? And specifically, more recently, we've talked a lot about guns, and I guess last week one of the big teachers unions said we're going to divest. How do you think about divestment or what's going to be in the portfolio and what's not going to be based on social issues as opposed to necessarily just a straight investment thesis?
I don't. And the reason I don't is that I have a loyalty and duty of care to the participants. I think we have 2 exclusions right now, Sudan being one of them, and that was legislative. So at the end of the day, we apply the laws that are placed on us, whether it be the federal government or the state government. And we just have one currently in North Carolina. I think it has to do with Sudan disinvestment. I can't tell you how difficult that is to try to de-invest from Sudan. And so that's sort of where all that stands. And then, of course, we have proxy issues when we have over almost $100 billion. So all those things come into play. But at the end of the day, as a fiduciary, loyalty and duty of care.
I mean, you should send them a list of your stuff. I mean, you got to divest sugar, got to divest climate change, you got to divest guns, got to divest. I mean, I'm just scratching the surface of stuff you got. You had enough trouble with Sudan to do that. No, but just send them the whole list.
No, but the reason
just send them the list.
There's a large question about whether
I know.
public pension funds.
I heard you ask the question.
They have a mandate.
I know. You heard his answer.
The investment. I heard his answer.
You heard
and I'm curious. Have you had this conversation? What do you make of the other pension plan managers and leaders who have taken the other side of this?
I've never had this conversation with any of them or any other treasurer.
Interesting.
Dale, let me ask you really quickly. One of the big problems with pension funds has been the expectation of what kind of percent gains in the market you can expect annualized. What do you expect that you can see?
Well, the assumed rate of return in North Carolina since I was in high school has been 7.25%. We have not achieved that on average for the last 20 years. And we're not going to achieve it for the next 20 years.
Are you changing the expectations?
We are. We lowered it 5 basis points last year. We're getting ready to lower it to 7% in the next month. Yeah. And the reason is that people do not lower these assumed rates of return because it makes the fundedness.
Makes the numbers look worse, right.
Fundedness of the plan go down.
But you're playing realistically.
I'm not a part of that.
Yeah.
We're going to figure out what's right. We're going to get it right, and we're going to keep it right in North Carolina. We're a very strong state, and it's the reason we're growing so much.
Kudos to you.
And you're cheering on the 10-year today. It's almost 3%. Go, go, go.
So, but I'd love to be back on the show sometime to talk about the progress we're making on health care. We have a $35 billion unfunded liability. We think we're doing some really common sense things to turn our 750,000 participants. This state health plan is as large as the domestic employment base of Berkshire Hathaway, Amazon, and J.P. Morgan. And we're going to take our advantage of our buying power. We're going to drive down the cost of health care. Our train left the station about a year ago.
Okay, Dale, you have an open invitation to come on back and tell us all about that.
Thank you so much.
Thank you very much.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.